we're back in 2026 with the first episode of iGaming Exchange, and we have the three horsemen here who bring us all the latest about the US gambling industry. Good special announcement, Bill and Martin is going to join us in Prague next month in March, so you get the chance to pick their brains in person. Jeremy is staying home. That's what he chose. So, guys, I will leave this session in the good hands of, I don't know, Jeremy. Probably you are the moderator today again. See you again, guys.
Thanks, Zoltan. Thanks very much. Good to see you guys. Happy New Year. Here we go again. Another quarter and another long list of stuff to talk about. Martin and Bill, how are you guys?
Good.
Good. Yeah. Thanks for having us. And as Zoltan's already mentioned, I've succumbed to the pressure to avoid any comments about me hanging out with ChatGPT and sentimental relationships with that kind of stuff. And I will be coming to Prague to support Bill, show him around the nooks and crannies of the city he may not have seen yet. So really looking forward to it, jokes aside.
Martin,
thanks for having me there.
You're forgetting, I've been there 10 times.
I know, but I'm sure you wouldn't have seen it all yet.
Bill, you want what are you presenting on? You want to give a plug for your panel in Prague?
I'm doing a couple of panels, always something on RG. We're going to be discussing predictive markets. In terms of that issue, Zoltan does a great job, and this Prague summit is scaling. It's funny, when I first started going years ago, and Jeremy, you introduced me to Zoltan, it was in Budapest. It was very good, and a lot of cool people, and not a lot of Americans there, which is always good for us. So we're like, a little more popular than most. But he's really scaled this, and so I'm very enthusiastic about it, but I'm going to do two things, which is related to this issue, to show the power of predictive markets and sweepstakes. And it does have a lot of power. I've been invited by and Martin knows this, the president of Poland, to come to Poland in late April to speak to the president's organized tech summit. He's having some of his own political challenges, but he's like the Trump of Poland. And I was just invited by your buddy, Jeremy Carino Mancini, and the Senate President of Italy to come to the Italian Gaming Summit, which is going on its third year. Mm-hmm. I wasn't there last year, but I was there in its inaugural to talk about predictive markets because it's having impact on sports betting operators across the globe.
Yeah. I mean, look, that's the topic, right? That's the topic. I thought we'd start with that, and I'm guessing that predictive markets will chew up a big part of this session because there's a lot going on, a lot to talk about.
Yeah.
I guess look, last quarter we talked about it a bit. We talked about all the the federal litigation, the injunctions. That the operators have been successful so far in getting a couple other court cases and other districts and circuits that have gone the other way. But so that's all play out. But I guess the biggest news, right, is that everyone was sort of waiting to see Trump's influence over the CFTC and what there hadn't been a whole lot of noise that really taken position, but there's been a huge pivot very, very recently, right? So, Commissioner, Selig has just made a left turn, been pretty vocal about, the CFTC, aggressively really, defending its exclusive jurisdiction and starting to file amicus briefs in these federal cases in support of the prediction markets operators. And I think even pulling back, from what I understand, draft advisory things that CFTC was going to issue. So that's that's sort of the biggest predictor, no pun intended, where this is all likely. So I'll just throw it over to you guys to just spitball about
Sure.
that and the politics behind the CFTC shift.
You want me to jump, Martin, or did you want to?
Yeah, if you want to have a go, Bill, and then I can chime in with both, if I may, the US and a bit of the global perspective, because as you both said, it started catching fire overseas as well.
So, Jeremy, it's really good to be able to provide Dalton kind of information that you and Martin and I always do. This is very current. I was in Washington last Wednesday, Thursday, Friday, and Saturday for the NGA, National Governors Association, and the DGA. I spoke to the governors in a closed door and their senior staffs about prediction markets specifically. I'm not really supposed to promote that, but I'm just sharing it. I'm not tweeting it or Xing it. But as a result of that, I got a call from a guy that my Washington firm just hired, a former senior counsel at the CFTC, Trump's first term. And my Washington firm's hired him. He brought me into the CFTC. And I will tell you this, as much as, and I'm sort of, I don't mince words really, and I'm not really good at it. Maybe I should be more political. I don't care for Donald Trump and I don't like his politics, and everybody has their opinion on it, and that's fine. I do respect he's our president. But let me tell you something. I think people like to think that Trump is a fool, and he's no fool. The CFTC is loaded for bear. They're already taking on, and I've gotten calls since this because I think they must have told folks from Europe trying to get licensed to call me. They're really trying to get more folks certified, licensed under the CFTC because that, expands the power of it. And as long as Donald Trump's president and Junior is on that board, I think this is a fool's errand. I know that lawyers like Dan Wallach and others, perhaps, even friends of ours that are regulators, have a different opinion. But I think for the next 3 years, at a minimum, this is the direction they're going to go in. They're not going to win ultimately. They may win a couple of district court cases, maybe. But the fact that CFTC, as you pointed out astutely, Selig is weighing in, really is a differentiator, right? And the other thing is, Martin and I have a panel on this at boot camp, Seton Hall, next week. And then the following week, I'm doing the opening panel with Representative Sean Fluharty just before the AGA gets up. And I got to tell you something, I don't think the AGA is going to be the AGA it used to be in a year or two from now. Because as you know, operators are leaving the AGA, FanDuel, DraftKings, and others. They're going to continue to do that. States are panicked about the revenue loss, but I don't think they're going about it the right way. I think there's a better way to meet with the federal government and try to come to some compromise than trying to push back. Because it's really Democratic states suing, not Republican states. So it makes it more of a partisan issue, and I think that's a bad look.
If I may to echo that, my reading of what Bill has just said, or what I would say, is that prediction markets are not going away. They're now part of the ecosystem, and let's brush aside that they don't perceive themselves, just for the sake of this argument, that they don't perceive themselves as a betting product, although as a sidebar, what struck me in Kalshi's latest advertising run was the fact that they did, and I guess deliberately referred to odds. Oh, is there any difference? Anyway, I will shun that aside, but prediction markets are here to stay. I might have said it before, whatever happens in 3 years' time in the presidential election, I guess by then, they will be very much part of the furniture. So even if, I guess, the new administration would have to be totally opposed to this kind of product to do away with it. The big question in my mind, however, in the same spirit is whether, and we've experienced it in our own industry, and I guess that will be the case when it comes to prediction markets as well, whether the federal authorities will start gradually imposing more restrictive obligations on the prediction markets operators, in particular regarding consumer protection. Although at the same time, without trying to contradict myself, and I believe we touched upon it in the previous edition of this program, it is still a fact that all futures contracts, swap contracts, all the financial services contracts, what have you, they do have a higher level of risk built into them. So I presume that this will continue playing a critical role. So just a few thoughts on what Bill has just said, one final one, and then I briefly, if I may, move into a bit of an international perspective. I guess our audience would have seen, if not experienced, that during Super Bowl, Nevada got successful in obtaining an injunction that prevented Kalshi, Polymarket, and all those guys from, I was going to say take bets, take trades from Nevada, but perhaps cynically or rather pragmatically speaking, it doesn't really seem to have affected the economics of the product during the Super Bowl too much. And I'm saying it with all due respect, and I have a lot of respect for the state of Nevada, for the people of Nevada. I happen to have many friends there for obvious reasons. So I think that's another practical consideration that's worth bringing up. Finally, on the international perspective, the two of you, I'm sure you would have seen it as well. There's an increasing number of European regulators that have come out on the negative side regarding prediction markets. Like France just stated, or the French regulators just stated, to be accurate, that it would be a massive no-no in the French ecosystem. The Dutch seem to have taken a similar stance. The UK Gambling Commission has netted out the fact that it would have to be regulated as a gambling product. So that long story short, I suppose what I'm trying to say, again, my opinion, that the overseas regulators will at the very least, having sort of consumed the US experience so far, they will be much better prepared for the arrival of the prediction markets operators, if they choose to come to their jurisdiction. And they will, or already have, as I've said, taken a view as to how these products should be regulated. So in other words, and I promise that's the final point, it will by no means be always the case that the Kalshis, the polymarkets of this world, could go down the US CFTC route in other jurisdictions, which then begs the question how successful they might or might not be if they had to go down the traditional sports betting route and would all of a sudden arguably face much stiffer competition of the long-established operators in the markets in question.
Right. I mean, the reason, well, some of the reasons that it's been so wildly successful in the U.S. is because it doesn't have the constraints of state-by-state sports betting, right? I mean, you have national liquidity, lower age for the participants, 18, not 21. Don't have the same advertising restrictions, all the things we talked about last quarter when we did this. And if you go down the sports betting route in Europe, you don't really have those benefits. But I think I agree with you both. I think prediction markets are here to stay. I think that there will need to be at some level some compromise. I mean, there are three things I think that need to be addressed to get the states on board, or at least to sort of to back down. Right. One is to solve the problem with the erosion of the tax base from sports betting. I don't know the answer to that. I don't know if it's you carve out um, you know, sports events markets from every other type of prediction markets, and somehow tax it or compensate the states in some way. I don't know the answer to that one. I think that's the hardest one. But the others are, we need to solve, I think, the integrity issue. I'll call it insider trading, but really with respect to impropriety around sporting events. We've seen, some evidence of that already with some other types of trading on events. And then RG, of course, we need to figure out how to sort of carve out RG, particularly around sports events, because I don't know, and you guys may know, Bill, you may have a sense of the percentage of predictive markets in terms of volume, sporting events versus other things. I'd have to imagine that sports dwarfs the others.
Yeah, Jeremy, that you've outlined it very, very well, as you always do. And just give me a moment to run through this. I like to sort of tell a story because when people crank on, most people tune out and just kind of babbling. Number one, very, very currently, Jeremy, and Martin should know, I'm sure he does, there was an election in New Jersey just 2 weeks ago tomorrow, to fill the new governor's congressional seat, Mikey Sherrill's congressional seat. It was the 11th United States congressional district. Now, transparency, I had skin in the game. One of the front runners was an aide to my dad for many years. He's a commissioner in Essex County and a client of mine, and of course I supported him and my family did. The day of the election, we walked into a bar that you've been to, Jeremy. Martin needs to get to someday. I don't think he's been there, Murph's in Totowa. And we went there because Totowa was in the district, and this candidate came in, and there were three guys there saying, "Hey, Bill, do you place a bet tomorrow night on Seton Hall?" I said, "I can't place a bet." "Why?" "Well, first of all, I'm precluded from betting on any New Jersey site because I was involved in the Pascrell repeal, drafting the law. And two, you can't bet on in-state colleges." "Oh, Bill, we thought you were smarter than that. We just bet down on Seton Hall on Kalshi." I go, "Wow, am I banned from betting on Kalshi?" So anyway, 10 minutes later, Peter Murphy says to me, "I just put $500 on Brendan Gill to become the congressman tonight, to win." Do you know they had every candidate $580 million in bets wagered just on that race? Think about it.
That's insane.
And so I loaded the account. I put a bet on Seton Hall, which the next day I won. I put a bet on Brendan Gill, and unfortunately he didn't do too well. And everybody was shocked. This kind of AOC, Mandami, progressive type one. And that's fine. She's a great lady. She'll be fine. She'll win in the April general election. But the issue is, in sports, we know we already have integrity. We have integrity monitoring, and all the leagues and the NCAA are all across that, and there's still issues. We don't have any integrity monitoring on politics. Or is somebody going to take a dive so somebody could win $1 million off another candidate? Or on any other events. And they have everything you can imagine there. The coin tosses, whether FIFA will start at 12:01 on June whatever, all kinds of stuff. Whether during the Academy Awards, Trump's name is going to be mentioned, how many times it's going to be mentioned, who's going to be the president in 2028. So what I think the states need to do, I don't think Kalshi needs to do this, or any of the other poly markets, Robinhood, Crypto.com, the big four, right? By the way, Kalshi's laughing at Nevada. I'm not, Martin, you are not, because we respect them. But the fact that Kalshi got that restraining order didn't prevent Kalshi from doing $1.4 billion on Super Bowl Sunday alone. They far outpaced the legal sports books, which many of us represent. I think the states need to desperately pivot and stop just having Democratic governors sue, right? That's not a good look at all, not for the courts, not for public perception. They need to sit down and explain to the federal government that they're losing revenue and they need to find a way to come up with a compromise. Kalshi could care less. They're fine until 2028, and it may all come crumbling down if some presidential candidate wants to shut it down. And I don't know that that's the case. Once you get to the White House, I don't know that that's going to move anybody. And 3 years from now, the other sports books could all be relegated to, you know, the sidelines. So, I think the issue of integrity and RG are paramount. And here's the thing I would say: I am on the exclusion list, I believe, across the country, but I know in New Jersey, right? But yet I was still able to play on couch. That's a problem, right? That is a problem. Even though I have nothing to do with Cauchy at the moment, the problem becomes, what about some other person that's on the self-exclusion list for problem gambling? Are they monitoring that? And they claim they are, but I don't think that's the case. And then the integrity piece is, all you need is some, and it's happened before in politics, where there wasn't betting on it, and certainly this is betting on it, but it's no different than the stock exchange. You're placing a bet on whether there's going to be a good financial outcome. It's not dissimilar. So that's my take.
100%.
No, I guess it's, as Bill's saying, it's a matter of pragmatism. Try to identify and then implement the proverbial middle ground that would work for everybody involved. And yeah, absolutely, the prediction market operators, and for the sake of this argument, I'm not trying to defend either side, just for the sake of the argument. Yeah, they're not sitting tied on their hands. They got plenty of work to do, but yeah, they've got the administration rather has their back. So besides the issues that Bill has already, or topic areas that Bill has already brought up, to my mind, it also begs the question within the parameters, the guardrails of integrity. Yes, absolutely. Whether individual states that have regulated sports betting or traditional sports betting, whether they also may want, if not need to, consider extending the scope of permitted markets when it comes, and would start getting complex with the likes of NCAA involved and all that, but could be looking at college, some of the political markets. Again, the issue might be integrity and what have you, but I suppose it might be more efficient and more prudent to indeed show some goodwill to try to negotiate, because that may prove to be a more efficient way of not doing away with prediction markets, because as we're all saying, they're here to stay, but finding ways of imposing more sensible, or more restrictions, of course, sensible, business efficient restrictions on their offering that would ultimately help protect the traditional betting space that is already facing lots of these restrictions, or even harsher restrictions. So that's what I would perceive as a starting assumption for negotiating any such compromise. To Bill's point, say, hang on, guys, there's already an industry that is regulated, it's generated a lot of revenue for us, the states. We wouldn't want to lose that. So let's please at least try to create a more or 100% level playing field that, of course, would have to reflect some of the inherent differences in nature of the products. So that's how I would try to, if need be, cobble together a compromise, a pragmatic, practical compromise that would reflect the stances the two sides of the divide have taken, as opposed to trying to drive the prediction markets out of the market, if you pardon the pun, because this is the final point in this round. Sweepstakes, I will not spend too much time to opine on their legality, illegality, but it is very clear that a lot of the AGs up and down the country have come to the conclusion that sweepstakes are not legal. So in their case, it is, I guess, the pragmatic thing to do. You're not considered legal, you're not considered welcome in this state. And if you're not prepared to leave, then we will take enforcement action. However, and again, we could have a long debate about the legal rationale behind prediction markets and whether they're betting just disguised differently. The cat's been skinned slightly differently. But they have, in my book, a much better legal base to stand on. And besides that, they've got the political backing of the ultimate authority in the country.
Hey, Jeremy, I'm sure you've gotten these calls before. I'm sure you have. But you get a client or a prospect that calls you and says, Jeremy, I'm doing age verification, geolocationing, affiliate services, ancillary services, payment processing. And I've been approached by one of the predictive markets. Am I going to get in trouble? And I find that hilarious that they ask that question for this reason. DraftKings and FanDuel just got into the predictive markets. They left the AGA. I mean, like, what's the question? I mean, like, they can't shut them down because they have a lawsuit trying to shut them down. I think it's a little saber rattling. And, you know, our friends at the DGE get cranky about this. We know it. But, like, this is the Lyft, Uber, and Bolt of betting. I mean, it's coming fast. And instead of trying to shut it down, I think the regulators need to get smart or they're going to be regulated out of existence.
Yeah, I actually agree with that. But what's the logistically, from a logistical point of view, right? What is the path for the states to get the ear of Washington to find some compromise, right? So let me just do one thing I want to say, Bill, before I turn it back over to you, right? I did a panel on predictive markets in Barcelona that night, and I got this question about the midterms and Congress, whether I thought there would be some legislative fix, et cetera, et cetera. What I said to the audience was a group of maybe 80 or 100 people. I said, listen, this topic is really, really important to everyone in this room, right? Because we're in this business. It is nowhere near the top of anyone's list in Congress. They could, with all the other stuff, I'll say, that's not the word I was going to use, with all the other stuff they have to deal with right now in this country, right? Nobody gives a hoot about this issue. So, what's the path? Particularly this year, midterms, and is there a path for any type of legislative help on this from Washington?
The pathway forward, without touching legislation for a minute, I think you're 100% right. And a list of, you know, the top 20 issues, this doesn't show up on any public opinion poll or on any congressional person's mind, other than maybe Titus, right? Congresswoman Titus, maybe. However, what I would do, and like I love giving free advice like this because eventually they'll take it. They won't take it from me, but they'll eventually take it. What I would do is I'd meet with Governor Abbott, Governor DeSantis, the governor of Ohio, the governor of any major Republican state, and get them to go to Washington and speak to the White House about how, now it's not hurting Texas because they don't have sports betting, but it's certainly hurting Ohio and Florida and other Republican states, and say, look, like we just got these Medicaid cuts, other cuts are coming, the COVID money's gone, state budgets are in crisis. Now we're starting to lose a revenue generator. But here's the problem that people don't understand in the industry. Regulators, state legislators, and operators. You're not understanding that the pushback is going to be raise sports betting taxes, which they're doing. Instead of doing that, you can organize with leadership of Republican governors, okay, who I spoke to in Washington and said the same thing to them. they're not as enthusiastic about it because they don't want to push up against Trump because they're afraid of him. And I get that. But they need to sit down and say, can't we develop a mechanism where you can regulate them and we can have a bifurcated regulatory regime where you require them to get licensed in each state? Because the southern states that don't have sports betting, because the Bible Belt is a concern, right? And this is a workaround. So I would say getting 2 or 3 Republican governors to sit down with the White House is their best pathway forward. If they're going to play the game of hoping for Democrats to take control of Congress, good luck.
And if I perhaps may add a layer to this, and off the bat I will have to apologize for sounding like a very broken record, but in my book Bill's absolutely right in saying that there's no other way because of the cuts that have already crystallized, as in budget cuts, and those that are inevitably coming. A lot of governors would be thinking, well, we could put up the tax rates on these guys. They're raking in the chips. Look at their Super Bowl adverts. They must have spent a fortune. And it's the usual debate around that we have had here around low margins and extremely high costs, especially acquisition and retention costs. But what I would throw into the mix is the still very slowly moving regulation of online casino. So if online casino is regulated, that's additional revenue. And to Bill's point in my book, all these segments could coexist, one next to the other. And indeed, the likes of DraftKings, FanDuel, so the leading sports betting operators in this country, they have jumped on the bandwagon of the prediction markets. And I guess the others are in the throes of doing the same. So it may be coming down to sort of having the proverbial Chinese walls on the inside of these businesses. But ultimately, I totally agree. The way forward is to find a regulatory compromise and regulate as many verticals within the parameters and guardrails of integrity, consumer protection, RG, as possible. Because to a large extent, it would do away with this federal state divide for starters. It would certainly help. We haven't touched upon this yet today, but that's always an underlying, if not all pervasive theme. It would help with the threats coming from within the black market, the boys and girls that don't care about any regulation whatsoever at all. But that's what I would suggest is the way forward, because it would elevate the levels of consumer protection, would help, to Bill's point, address the constitutional regulatory divide here, would be generating additional revenue. So it's sort of a self-perpetuating machine. That right now, it seems to be all over the place. Lack of regulation, or some aspects are not regulated. Some verticals remain unregulated. And yet again, I would agree with Bill that the approach so far across the industry has been to stake out one's individual territories. Let's do all we can. But there are just a few people, very sadly and unfortunately, who'd be looking at the big picture. And I totally, that's the final point, appreciate that the commercial departments, their horizons, of course, they do have their long-term horizons, but it tends to be, in practical terms, from one set of results to the others, because that's also expected by the investors. So how did you guys do in the last 3 months? It's really cool that you have and I'm oversimplifying it, overgeneralizing it, but in essence, it's really cool that you have 3-5 year plan, but we insist on you making money now, because that's our expectation. So what I'm trying to say, that I totally appreciate it's difficult to consider the long run. I think there needs to be a way of factoring this in. And in my book, I'll say it again, that's the conclusion and the moral of this story. get as many verticals sensibly regulated and taxed as possible, find those regulatory compromises, and in practical terms, these, at least the leading businesses, they will want to, and they already are, tapping into all these verticals. So ultimately, it should be, to come full circle, in their interest as well to operate in a clear and sensible regulated environment.
Totally agree. Totally agree. Just two things I wanted to say. One is that, from what I understand, the public position, supportive position of the CFTC as of late has helped calm the investors in the space, and it sort of signaled and telegraphed that, you know what, this is a safe market to enter. So the investment is going to go through the roof, right? Everyone's going to want a piece now, and they're going to want to see a return on that. So I think we're going to see significant, major institutional investors feeling that they're in a good spot right now to jump in. And the other is, I'd be curious if there's any data on, because you mentioned black markets, Martin. Have you guys seen any data on what impact Kalshi and others have had on the black market operators? I don't know if there's anything out there on that, but
yeah, I've got to admit that I haven't seen any data as such, but I presume that the advent of these operators would have had positive impact in terms of enticing customers that previously, to give a silly example, customers who wouldn't have been allowed to bet on the likes of the Grammys or the date of Taylor Swift's and Travis Kelce's wedding and all that, that's something that might have lured them away from the black market operators, because the prediction markets providers, they offer a broader variety of markets, which is certainly a factor. And now to your point, Jeremy, now there's a clear stance from the White House and CFTC. I think that would have becalmed the investors, but also would have given those who may have or even considered playing or even played in the black markets, boosted their confidence. Look, I would have probably done it anyway. I'm trying to step into their shoes. They would have probably done it anyway. But now, the ultimate authority is saying that this is perfectly legal. So I guess the upside, or one of the upsides, besides an increased level of competition, is the fact that there is a competing product to the traditional betting space that, in my book, does have the ability to entice customers that otherwise might have been minded to play with black market operators.
Jeremy, there's a company that just got bought out that I served on the board of, and Martin was somewhat involved with, called YieldSec, and they do have an internal study that's been done. The predictive market space globally is impacting regulated operators far more than the black market. Far more.
interesting.
Now, the reason for that's what YieldSec is going to be coming up with, is an analysis on why that is.
So what impact do you think all this is going to have on, getting back to the states, on state sports betting expansion? Because there are like 5 or 6 states that have some legislation kicking around to legalize online sports betting, et cetera, right? I mean, Hawaii, Minnesota, Mississippi, Nebraska, South Carolina, which I think is going nowhere in large part, South Carolina, because of the chaos around predictions. But are these states that we haven't been able to penetrate yet with regulated sports betting? Are they just going to give up?
I don't think they're going to give up, but I think they're late to the dance. And I don't think there's going to be the huge push there is by the big tier 1 operators, because they're already in the space of predictive markets. And, do they really care about Minnesota coming on board or Hawaii?
That's a good point. I mean, the volume is just unbelievable. I saw something this morning that I saw a note that said that Kalshi and Polymarket saw like a 45 or 50% increase in volume, trading volume, month over month, last month, despite the fact that there were fewer football games, right? So this thing has taken on a life of its own.
Yeah, because there's so much, like, you can't go on to any of the legal sports betting operator sites and bet on politics or the Oscars, or, it's just, they don't have that yet. They have some other esports and things like that, which are helpful. Um, you know, I think that conventional wisdom, and you asked a very good question, you always do. Conventional wisdom is that the poly markets are massive in sports betting, but they're also massive in a lot of other tiers, right? Um, that are not conventional sports betting uh, propositions. And when you can bet and see, like when you go on Kalshi or Robinhood right now, and you want to bet on the midterm elections, the likelihood that the Democrats will take over, which is at 79%, right? They'll tell you how much money's been bet GGR, right? And so when you look at that number, it doesn't really matter, when we get to that time of year in the end of May, June, July, when hockey's done and basketball's done, there's no football, and there's just baseball and golf, and horse racing. Kalshi doesn't care about that. They have so much off.
So what if the states, you know, um, redefine sports betting? In other words, do what Arizona did in their legislation, right? And authorize event wagering. And so and sort of expand this, what Martin was talking about, expanding the scope of what it is you can bet on in states that have sports betting.
Well, they're going to with federal preemption.
Yeah. Now I was going to say that indeed might be the way to go, as you both would know, and apologies to go back there one more time. In European jurisdictions, down in Brazil, other Latin American jurisdictions, online casino serves as the complement. So in the Dutch season, the days of late summer and there's no sport and we're all eagerly awaiting, in this country, football to start. That's what likes of online casino come in. That's what they're designed to do. There are no games around, or no sports games around. So, couple of points. I presume, and that's what these guys are bound to be ultimately after. DraftKings, FanDuel, the cross-sell between their prediction markets offering and the traditional sports betting offering, with different spikes, different levels of variety. They're trying to reproduce in a way what they did with their DFS product, the databases. That cross-feeding between the two, at least that's what I would be doing. But ultimately, to the point that you have both made, I think it will totally redefine not the sports calendar, but it will redefine the betting/trading calendar. Because indeed, in our traditional world, the spikes would be around Super Bowl, then March Madness, and then it all starts dying down. It might not, or it will not this year because of the Soccer World Cup, but brushing that aside, the idle summer period tends to be inevitable because there are just not that many folks that would happen to be betting on baseball. In betting terms, it's not necessarily as popular as football and some of the other sports. So yeah, long story short, I believe that all this will definitely put a pressure on rejigging the existing betting behaviors, trading behaviors, and the calendars. And to Bill's point, yeah, indeed, the state regulators, friends of ours, I think they would be very wise to get themselves plugged into it and have a think about, I'll say it again, their existing guardrails of integrity, what kind of additional markets they might be prepared to permit, so that they do not regulate themselves out of even existence, if you will. Hopefully I'm not sounding too harsh, but that leap of faith, if you will, in my book will be absolutely necessary, because any regulation needs to be in lockstep with practical developments in the given market. And this market these days, especially in this country, at least for now in this country, has been extended to cover the prediction market space. It's part of, effectively, it's part of the same market.
Jeremy, you raised a point earlier, right? Last year, at the end of last year, everybody made predictions on how many states will go iGaming, and most people said none. And already we have Maine, and there's some others that are moving. And they're moving because of the utter disaster that sweepstakes companies did in not taking seriously these shutdown. Now, I will say this. New Jersey passed a law banning sweeps. You can still operate sweepstakes in New Jersey because the regulations still have not been written. And the law was signed by Governor Murphy on August 27th, right? So that's not the way to go. The sweepstakes should take a chapter out of Kalshi. And so they're not regulated at all. Whereas Kalshi is by the CFTC. And so the sweepstakes are now coming around finally, because I'm seeing it, to wanting to be regulated. The problem is once you ban it, it's hard to unban it and regulate it. I got to jump, but I do want to say one thing. Can we please get together with the ladies for dinner? We've been working on it forever.
I know, that's on me. I owe you guys dates. You got it. Leave that.
I'll certainly speak to my boss about that.
Take care, guys. Sorry I have to jump.
All right, Bill. No problem.
Thanks, Bill.
See you. Hey, Martin, so we have only a few minutes left. I wanted to jump to iGaming because we spent all this time on prediction markets and a little bit on sports betting. But there's one sort of innovative product in a jurisdiction that I think may get some legs. I'm curious on your take in terms of expanding sports betting. So my understanding is that the Seminoles in Florida are offering a product on their mobile sports betting app that looks like a slot machine, right? And then my understanding, and you may have better information than I do, is that it doesn't have an RNG, that the outcome is determined by Formula One races. So it's similar to historical horse racing, right? Yeah. So it's a sports bet on Formula One, but from a user interface point of view, there are reels and it looks like a slot machine. I haven't seen it, but I'm getting this. I don't know if you have a take on that or if you have any more detail, but if in fact that's the way the technology is going, where people are getting creative in the states that have online sports betting, but not online casino, but they can expand the pie by offering a product that from a customer facing point of view looks like casino, but it's really a sports bet. That may be an interesting path commercially to increase revenue and tax revenue, etc.
No, absolutely. I suppose at the risk of stating the obvious as a prelude to my comments, it does help, and I hope it won't be coming across as too cynical. It does help that, as you know, Jeremy, Seminoles have exclusive rights over all things sports betting, let's call it sports betting in the state of Florida. So that gives them a lot of latitude. But in general, I've got to say that I would have no issues with trying to identify ways within the guardrails of legality, of course, to push the envelope of regulation. And this indeed, from the pure practical perspective, that may be the way forward. Use the existing gaming and betting formats and either merge them, bring them together, figure out how we could take them to the next level. Because I might be sounding like a very broken record yet again, because I believe I've brought this point up at our jamborees here a number of times. But if you look at across the sports betting space, even the online casino space, the websites tend to look identical. Right. I suppose what I'm trying to say is that everybody's on the lookout for the next big thing. And that's, well, prediction markets in this country. It used to be the betting exchange, but betting exchange outside of the UK hasn't really caught fire. So are prediction markets just a disguised form of a betting exchange? I will leave it out there just as a food for thought. But in a nutshell, I like this creative way of thinking. Arguably, it would be pushing the regulation, but I would also reiterate the point that the best way from the regulatory and regulators' perspective of preempting this envelope or any such envelope being pushed too far is to go and regulate the products that are akin to this model. So in this case, online casino. So if I were a regulator and go, well, I don't really like what you've done about this Formula One based product, my response would be, okay, well, let's have a discussion, let's have a debate as to whether it's actually at odds with the regulation. But ultimately, the strategic point or the strategic argument would be, but why don't we also have a discussion, have a chat about regulating online casino? Because that would generate all the benefits that we keep talking about on these calls.
Right. But I think that's a much harder lift, as you know, better than most, right? You can have that conversation with the regulator, but their view is, it doesn't matter what I think or what I say. You need to go to the legislature and get it enacted into law.
No,
right? So
correct.
Yeah. And so, this idea of this Formula One, racing, dressing up, a sports bet to look like some casino product, I think is a better approach, where you have a chat with your regulators, convince them that the product at its core fits within the definitions of the regulation and the legislation, and clearly there's an appetite for it, right? So that's the argument. If there's an appetite for it, we can do it in a way that creates an attractive product to our sports betting customers. It doesn't run afoul of the current legislation. Or regulation. Don't think of it as an expansion of forms of gambling. It's just another way of delivering the same product, which is authorized, and get everyone on the same page that if you can't beat them, join them, and it's a way to increase revenue. And by the way, regulate a version of a product that customers and consumers are playing anyway on the black market.
Absolutely. I can't agree more. And as I've said, I'm all in when it comes to these creative solutions. It's always good to have a discussion with the regulator, and most of them are, of course, well, all of them would be prepared to have that debate. A lot of them might be welcoming to finding a compromise or middle ground that would work for everybody involved, for the reasons you have just alluded to. Because these days, as demonstrated by our own debate, it is about variety, frequency, and quantum. Because it's sort of like Netflix. Folks might start running out of series, so Netflix keeps feeding them new and new series that they may or may not like. But there are these options. Nobody wants to just sit around and have nothing to do, let's say, betting-wise, between Super Bowl and March Madness. And I appreciate that there's a lot to bet on. But going back to the previous debate we had, some of these periods have historically been more idle than others. So if you can fill that out with your content, then you may be the winner of this particular championship.
I agree. All right. Wow, look at that. The hour came and went. Looks like we are about out of time. As always, a pleasure, my friend. Good seeing
The
you.
pleasure's been entirely mine. Thanks for having us, Sultan. Just like
Sultan,
Bill, I will
thanks
have
as
to
always.
jump as well. And I can't wait to see you in Prague. Finally. We'll get there. Thank you very much.
Zoltan,
Speak soon,
always a
guys.
pleasure. And
Bye-bye.
I'll make it over to Prague next year.
That's a commitment.
Oh, also, yeah, even better. All right, I'll chat with you offline about that, my friend.